So here we go, traders. Here's a little mini lesson on how to trade with pure price, Fibonacci, and institutional bias. This is trend inception on S&P. May 23rd, price is finding ultimate support. In the course, we knew this extremely well. Days, weeks, months in advance. Early in the morning, we discussed with students before market open, not the place to short. We discussed with students before the market open that this is ultimate trend inception, where institutions been stepping in from since the month of March. This is day trading chart. If I convert this chart to 3, what do you see? Stunning reminder. This is Fibonacci trend inception, not the place to short near. Knowledgeable price action and Fibonacci trader knows. And on standby for long only. Multiple long trades reaching key Fibonacci target. And this is what price does, pulling back from Fibonacci reversal zone. Buyers step in from trend inception, but reaches trend exhaustion. Massive day trading charts confirming that. Not the place to buy, the place to exit. It is that simple. Do not overcomplicate the trading. Very basic 2 rules in the course. Buy at support when rules are met. Sell at resistance. Did we know or did we know that market will sell off? Of course. Take a look from where. Ultimate Fibonacci resistance. This is market yesterday, traders. Did we expect for the market to crash from here? Of course. This is a rule you learned day number 1. And if I convert this chart to 5, what do you see? Stunning reminder. Not the place to buy, the place to monitor for short. All in advance, never after the fact. So, ultimate trend inception across all charts on S&P. Doesn't matter if you trade 5, 6, 7, 11. Doesn't matter if you trade Renko. Doesn't matter if you trade range charts. Doesn't matter if you trade tick charts. It's all the same. Know where trend inception is. Monitor for the rules. Rules are met. Take a trade. It is that simple. When this level correlates with institutional trend inception, it's a stunning reminder where institutions been stepping in from with vengeance. This is the month of March, traders. Everyone seeing this? So what is the difference between market this morning, market yesterday, and this entire week? Bullish weakness remains, traders. There is no bullish rallies. Institutional support remains respected, but buyers are weak. And that's what knowledgeable trader understands. Where to enter, where to exit your position is everything to the tick. Speculation not an option. And what the price will do again and again and again at trend inception is everything. Because the first time since the month of March this support is broken, it's a big, big ouch. So, Know what institutions do? Know where trend inception is. Rules are met, take a trade. It is that simple. Do not overcomplicate the trading. Buy low, sell high. And if I would take a look on gold, because gold is also stunning instrument, what did gold reminded you? Ultimate trend inception, May 21st, stunning and flawless. Gold put up a bit of a war zone at the end of the minor trend. Ultimate Fibonacci resistance. And where buyers stepped in from with vengeance again and again and again is no surprise. Ultimate trend inception. Not just on day trading charts, but also on institutional charts. Time and time again. You want to trade with institutions, not against institutions. Know where trend inception is. Stunning, flawless formations on both S&P and gold. 5 trades in Fibonacci Mastery course this morning. All reached Fibonacci targets. Right now, gold at trend exhaustion. If I would convert this chart on gold to 1, what would the knowledgeable trader see? Bearish pullback in a play. Not the place to buy, the place to exit. And if I convert this chart to any chart, knowledgeable trader would know. Not the place to buy, the place to exit. This is a trade from the trading room this morning. Stunning and flawless. Breathtaking. Trade on gold. Reached Fibonacci target. So, knowledgeable trader right now monitoring for bearish pullback. Knowledgeable trader who understands if you're trading with institutional bias, you're ignoring all the shorts. You're looking to buy as low as possible. And if I convert this chart to 5 minute, exact same formula will remain. Nothing has changed. Buy at support, sell at resistance. This is gold pre-market, sold off. Where did the buyer step in from? Support. If I convert this chart to 15, identical formula will remain. No surprise here. None are present. But again, ultimate trend inception on gold since Monday. Stunning and flawless. Now buyers exhausted, gold pulling back. But knowledgeable trader who understands institutional bias looks to buy as low as possible, looks to sell as high as possible. Correct? So, if you choose to short gold right now, which we can have number of shorts on the trades, pretty please understand it is against institutional bias. So, if you're a conservative trader who knows how viciously institutions been buying gold since Monday, you are ignoring on the shorts. You only look to buy as low as possible. It is that simple. Doesn't matter if you trade S&P, doesn't matter if you trade gold, doesn't matter if you trade pound, euro, Apple, Amazon. Formula remains the same. Price action is exactly identical, is exactly the same. So, this is gold right now on any chart you choose to trade. Correct? Let's leave gold and let's go back to S&P, shall we? S&P at key support, my goodness, will buyers step in again? It would be a beautiful thing, as buyers had done since March. Knowledgeable trader knows and understands that. The only problem remains, buyers are weak. In the months of March, buyers were flawless and stunning. Yesterday and today, buyers are weak. So, this is your range, key support, key resistance, all in advance, never after the fact. Monitoring for long. That's what knowledgeable trader does. Because every single short in this area since the month of March fails. Choice is yours. Do you want to drive your Ferrari on a highway? Then you monitor for long. Because if you shorting here, you're driving your Ferrari into a brick wall at 500 miles an hour. Not something you want to do, I hope. And that's the power of Fibonacci reversal zone. All proprietary levels, all proprietary strategies that start with this very simple reason, very simple rule. Buy at support, sell at resistance. And if you know where institutions buying, you never ever ever shorting near. It is that simple. Here's another trade that played out this morning. So here's another trade on S&P that sold off as expected. That came from institutional support. This is quality trading, traders. That's all you have to do. And if you can do this, the skies are the limit. So here's the account statement of the legend in the course. Here's Brett's account statement for the month of May. Brett been trying for 20 years until Brett took the course. Brett finished group course and decided to learn everything. Moved up to mentoring, moved up to graduate boot camp. He's unstoppable. Brett is making an effort. So, using exact same rules we just discussed. This is serious effort. This is not trigger happiness. Starting in July 2018 with Mastery Group course, doubled SIM account. This is a key word. If you think only wussies go on SIM account, good luck on that one. I work with hedge fund traders who are learning the method and doubling their SIM accounts before going live. If you treat trading with respect, this is what knowledgeable trader does, who is interested in long-term success. And this is what happens next. Account grew to 96K in 8 months, starting with 25K account, 288 profit margin. Clear on that? If Brett can do it, so can you. All you have to do, make an effort. All you have to do, play by the rules. So, you can see prior Brett's story on our website testimonial page, because S&P is setting up for bullish rally. If Brett can do this, so can you. It is that simple. Make an effort. Treat trading with respect. Buy low, sell high, only when rules are met. And if S&P at institutional support, Brett would never short. It is that simple. Here comes bullish rally. Are you ready? Stop 28.18. Knowledgeable trader looking to buy the market. Applying buy bracket order. Very important moment. Not the random market order, buy stop bracket order. If the stop too big for you, long S&P, bringing up the targets, pretty please make sure that you do not forget. Here comes reminder. that Brad knows extremely well. If you trade with institutions and not against them, you love what you do. You only need one. And that's when trading becomes easy and enjoyable. As endless list of graduates all over the world, from Florida to New York, to England, to Hong Kong, to Qatar, from few $1,000 account to 7-8 figure account trading the method. What is stopping you? Shock or not? Did we know or did we know? This is not the place to short, it is a place to buy. Start scaling out, pretty please. This is key Fibonacci resistance. This is where market will put up the war. This is where trend decides. Do I want to become major or do I want to remain minor? Choice is yours. What do you want to trade? Critical moment on S&P. Every day, every time. Exact same Fibonacci levels. Exact same accuracy. Exact same joy and happiness in trading from those who making an effort. There is no surprise what price had done. Massive number of bullish trades, again and again and again, from institutional support. Next. Did we know or did we know that this level would be a problem? Of course. Shock or not? Anyone surprised? Absolutely expected. This was Apple for 7 months at this level. When Apple doubled from key Fibonacci support despite worst earnings in 13 years when Apple was at 91. 7 months on Apple war zone at key Fibonacci resistance. And this is junky little chart in front of you, as expected. And this is exact same thing that played out on Amazon. Time and time again, there is no surprise. Identical level. Very different strategy. There is no limit to how much I can teach you. All you have to do, make an effort. Choice is yours. Do you want to trade range charts? Do you want to trade minute charts? If you will ever choose to ignore the targets, nothing is possible. We absolutely expected that this would be a problem. Correct? It absolutely remains the end of the minor trend when buyers are weak. Just like on Apple, just like on Amazon. Choice is yours what you want to trade. Identical accuracy applies. This is the exact same level that was on Euro monthly, where Euro skyrocketed from. Correct? There is no surprise. It's all the same, traders. The most important support on Euro respected. Euro skyrocketed from this level until Fibonacci reversal zone, where Euro sold off from again. And this is Euro now. Shock or not. It's all the same. Euro struggled to break through 113 to the upside in the last few months. And this is S&P now. Bullish weakness remains. To the tick, stunning reminder. If you know Fibonacci levels, if you play by the rules, the sky's the limit. Ultimate accuracy, ultimate consistency, as proven by graduates of the course, from complete beginner trader to hedge fund manager. So if you understand the bullish weakness, you absolutely must adore and respect this level. And that's the market traders, the previous 3 hours. Nothing else is possible. Only Fibonacci can give you this much accuracy. Nothing else ever will. So understanding what separates bullish strength from bullish weakness is everything. Never forget that. Understanding the bullish weakness, respecting this as your key target is everything. Just like on Apple, just like on Amazon. If you choose to disrespect this level as your key target, when you are dealing with bullish weakness, nothing good is possible. The end of the minor trend. Buyers are weak. In the months of March, they were not weak. Today they are. There is no speculative stop placed in flawless place. There is no speculative target. Strict rules at support and at resistance. Rules are met, take a trade. To the tick, stop remains respected. To the tick, target remains respected. There is a reason. Hedge fund managers in the course. Ultimate accuracy. Stress-free trading, if you play by the rules. As expected, buyers stepping in again. It is institutional support, not the place to short. As expected, stop respected. No speculation here. Ultimate accuracy remains. Just like on Apple, just like on Amazon, just like on Euro. It's all the same. Bullish weakness with institutional support respected. Trader tested to the core. Trader who obeys the rules, not in pain. So how many times did the price try to touch the stop? How many times did price reminded you? Speculation never an option if you understand that this is institutional support. 3 hours later it remains respected. 3 hours later we're dealing with weak buyers. There is no surprise. That's price action for you. You'll be amazed how much you can see if you understand where support and resistance is, if you are not blocking your vision with indicators. Market is flawless Fibonacci chess game. And if you can trade one instrument, you can trade them all. The only difference, risk management and trade hold time. And what you're witnessing in front of you, again and again and again, is what we dissect in the course every day to the tick on every single trade, with precise stop and target, with stunning reminder. You understand where support is? You understand where resistance is? You understand where bullish weakness present? Nothing else is possible. Understand and respect that. And if you do, the skies are the limit. Doesn't matter if you trade Euro or Apple or Amazon. And that's what you see every day, every time, to the tick, on every single trade. Choice is yours, what you decide to trade. So if you come to the website under courses, please review the information. A whole lot of phenomenal changes coming in the month of June. All of the fees, all of the costs will increase significantly. Because when I work with Wall Street executives, when I work with hedge fund managers, they keep asking me, why am I doing this? Because I love stories like Brad's. Because I love stories like William, like Ed, who who are trading the method in US and globally. As of June 1st, price is going back up to 49.77, and that would be the lowest price. So, if you're thinking about joining us, never been a better time. If you're considering private mentoring, pretty please speak with me first. As of right now, waiting list only. I'm taking students from group course. If you are flexible, we can talk. Private mentoring 6 months includes all group classes, all videos. You can start viewing the moment you sign up, where you learn rule-based method, where you learn how to trade with ultimate accuracy, ultimate precision, where I am with students without any interruption, Monday through Thursday, with Monday being key educational day, from 9:15 AST until for average 3 hours per day, 12:30. And all the other subsequent days, Tuesday, Wednesday, Thursday, from 9:15 AST until 11 a.m. without interruption. So, any questions? Listen to the students first, because if any of the students can do it, Steve just signed up for private mentoring. First class. Susan in the group course. Every single trader. Different story, different account. Choice is yours what you decide to trade. Any questions? Look forward to speaking with you. 925-257-4298 or info@fibinstitute.com. Thank you, traders.